For this video, we're gonna have a look at RyanAir, the Irish airline industry, which is mostly known for their incredibly cheap flights. Now, I don't usually look at airlines because I don't think airlines are a good investment. And this is also very much what Warren Buffett says famously as well, because he sold many of his airline stocks all the way at the bottom of their valuation, because he mentioned that there's one way to really get poor when you're rich, and that's to just buy an airline company. And I think I mostly agree with that when it comes to most of the airline companies that I've looked at. But let's have a look at RyanAir, because I think RyanAir has been quite a famous one as of recent. They are very, very cheap when it comes to their ticket prices. I'm currently living in Ireland as well, and if I want to go back to the mainland of Europe and book a flight to, let's say, Amsterdam, I can go there for just 25 quid, which is an absolute steal. So, is this profitable for them? I'm actually not entirely sure, but for me it's a great deal anyway. So that's why I want to have a look at their numbers and see exactly how RyanAir has been doing for the past 10 years. Now, they recently actually released their 2022 annual report, so let's have a look at their numbers here. So what we can see when it comes to their revenue growth is that they have been very much disturbing the market in 2013 onwards because of the way that they're able to undercut many of their competition by just giving the very low prices. We see a revenue here in 2013 of 4.8 billion, which has risen all the way to 8.4 here in 2020. Now, of course, what you notice in the coming years after that is that the numbers start to drop drastically when it comes to revenue and earnings. Now, they did get some government backing during this time, but of course, the COVID pandemic was a terrible year for airline companies because nobody was able to leave their country. Everyone has to self-isolate themselves, so naturally not that many planes were in the air. I also think it was quite interesting to see that RyanAir has about 5.5 billion here in direct revenue, and the other 3 billion here that you see is noted as ancillary revenue, which is to say 5.5 billion are made simply from the tickets alone, and the additional 3 billion comes from anything on top of that. So whenever you order a ticket and you want to carry additional baggage with you, additional trolleys, whenever you want to have a priority ticket, whenever you want to buy any of their insurance, all this revenue is part of that ancillary revenue. And what we saw here in 2020, it was about 3 billion. I think about, let's say, 35% of their actual revenue. But then we look at 2022, and here we see that their ancillary revenue is about half of their total revenue, which is to say they make half of their profit from selling the tickets, and the other half is made from selling convenience. And I think this is very much the edge that RyanAir has over many of its competitors, which is to say they offer very cheap flights, but if you want to have anything on top of that, that's where you pay the real bucks. Nevertheless, they saw a very nice revenue growth here all the way until 2020 onwards, and then it dropped down massively. Now, what exactly is going to happen with RyanAir in the future, I am not entirely sure. Because, of course, COVID pandemic really changed the way that the world was operating. We're doing a lot more virtual meetings now as opposed to physical. We try to reduce our carbon footprints by reducing the times that we fly. So I think there is definitely a reason to say that their revenue might never really grow that much again. But nevertheless, I think historically looking at the numbers, they've been doing pretty well for themselves in the initial 5 years of our spreadsheet here. So this brings us to revenue, and it tells a very similar story, which is to say that their earnings has been growing quite steadily up until about 2020 onwards, where we saw some negative or very low numbers. Now, of course, any airline company has this inherent risk inside of their business. Like, if anything goes wrong on a macroeconomic scale, airlines just don't make that much money. And I think by and large even it's pretty well known that airlines usually don't make that much money. That you quite often have to be bailed out by the governments because the business model of the airline companies themselves simply isn't working out. But of course, countries are very happy to subsidize airline companies because it brings a lot of tourism and travel to your country. So what we can see when it comes to EBITDA growth, we see on average about minus 11%. This is mostly again because the final 2 years have been incredibly low, where for some of the companies like the postal companies or the cargo companies, we've seen absolute record numbers. For airline companies, we've seen quite the opposite here. Looking at that debt level, we can see that it's become relatively stable here for the initial few years, and then they made some investments here 2019 2020. They bought a lot of planes to really invest into the future, and then unfortunately for them, COVID hit and they weren't really able to utilize all that much cash on hand. Always a bit of cash on hand, which is very nice to see. Market cap has been growing for the past 10 years on average by about 5% a year, which is very much underperforming the stock market. I always say that on average I expect a 10% return, a 10% IRR. Now, of course, dividend is not included in this number, although to be fair, RyanAir pays a very low dividend if they do pay one. Enterprise value is the entire value of the business. It is the market cap, so the price on the open market itself, to which we then add the debt and subtract the cash. Now what we see here, that enterprise value has been growing quite a bit faster than their market cap has, because their debt has been growing quite fast relative to their market cap, as well as relative to their excess cash. So of course they are over leveraging themselves here, and this is also very much what we see in a little bit as well. So now we move to EV/EBITDA, which is to say, how many years does it take for RyanAir to pay back the entirety of their company? Now, when you look at these numbers, what you might see is that towards the last 2 years, these numbers have been completely crooked. But anywhere before that, they've been ranging between the 6 to 14 times multiples, which is quite a big range. And that is not even considering the massive range that we have after this, where they had a year of negative earnings as well as a year of very low earnings, which very much threw a wrench into their multiple. But I think on average, I think it's more fair to say that a company like RyanAir, historically, they've been around the 9 to 12 times multiple. So this brings us to their debt level compared to their earnings. Are they able to buy back debt if they are required to? Are they over leveraged in any way, shape or form? And like I mentioned, airline companies are always a bit of a risk because they have to make massive investments, and they quite often don't really get the return from their investments. And I think this is also what we see in some occasions with RyanAir as well. Here in 2020, when they were over leveraging themselves with their debt to buy the additional fleet of airplanes, I think they very much over leveraged themselves compared to their earnings levels. They have been at 5 times earnings. Now I always say that I want to have a company that is below 3 times earnings, because after that it becomes a little bit more tricky. After that, whenever you want to issue a loan at the bank, or whenever you want to release obligations on the open market, you are going to be required to give a premium interest on your bonds, on your loans, because you are quite leveraged, and the risk of you going bankrupt in the future is quite high. Now, like I mentioned, we often see with airline companies that they do get bailouts from governments, but of course this is still not a good thing for the shareholders, because bailouts basically mean by and large that they either get a loan from a country or they very much dilute their share count. So either way, this is not a very favorable thing for you as a shareholder. 2022, with the earnings that they had last year, they are very over leveraged. Now, I do expect this number to go up again towards the range of about 2019, 2018. And I think these were probably 2 very bad years for them because of the COVID pandemic. But still, just looking at these numbers alone, I am very scared to buy a company like this. So this brings us to cash flow. How much cash flow from operations, how much pure cash money do they make from simply operating their business? So I think what we see here as well is, I think, in line with what we saw with revenue and earnings, which is to say that their cash flow from operations, the pure cash money that they make from operating their business, is very much increasing. Now in 2020 we did see a negative number here, and in 2021, 2022 it stabilized at normal numbers again because they were given some additional funding. Now, I think the scary thing whenever you look at airline companies is that they have to invest quite a lot to keep on maintaining the airplanes that they have, to keep on buying additional fleets, to keep on replacing the old airplanes that might not be working as properly as they should be, or aren't properly insured or safe. So whenever that occurs, of course, a company like RyanAir has to buy an additional fleet, and those costs are tremendous. What we see here is that occasionally, like in 2013, like in 2015, they have to spend a lot of money to future-proof their company, to really make sure that they're able to maintain the business in the future the way they've been running it at that moment. So a very high capital expenditure. It has been coming down a little bit here, but still I think these numbers are very high compared to the cash flow that they have. So because of that, what we see here as well with free cash flow is that there were plenty of years where they had a very negative free cash flow, which is to say they did not have any cash to spare for you as a shareholder. And of course, buying free cash flow is what you really want to do whenever you are a value investor. You want to invest in the free cash flow because that is your pro rata ownership of the company. So this brings us to the shares outstanding, and I think this is very much a positive light, I think, for RyanAir, because for the past 10 years what they have been doing consistently is buy back their shares, even at a number as high as 3% a year, which is actually quite incredible for any company, and especially an airline company. So I think RyanAir is very much rewarding shareholders by reducing the share count and increasing your percentage ownership of the company simply for holding the share. So this brings us to the free cash flow per share. Divide the free cash flow by the amount of shares outstanding, and then you get this number. And what we see here as well is that the free cash flow per share has been on a bit of a shaky ground. It's been negative, it's been positive, but by and large I think it's quite difficult to create a common trend with these numbers. Looking at their price per share, they have been increasing on average for the past 10 years by about 8% a year. They started with €6.43 here in 2013. They reached a high of €16.25 in 2020. And of course, after that, COVID pandemic hit. So their earnings took a hit, their revenue took a hit. And because of that, naturally, their share price took a hit. Free cash flow yield on average has been about 4.5%, which also very much includes the negative yield numbers here as well, which I don't think is entirely fair to take into consideration, and I think probably the 10 to 11% is a nice conservative estimate for us to take into the future. So this brings us to projecting RyanAir into the future, and I think that can be quite difficult here because their numbers have been a bit shaky from time to time. But I think that the best we can do is say that they are able to maintain the growth that they have been having from 2013 all the way up until 2020, where they have been booking a relatively steady growth when it comes to their earnings. Just to give you an overall estimate, I think it's about 7% year-over-year growth into their earnings. So what I'm going to do here is I'm going to take the earnings that they had in 2019, so not 2022, because I think that was a record low for them because of the COVID pandemic, not 2021, not 2020, because I think this number might still be a little bit too high, because I think this number is a little bit too high. I think there are some growing pains with starting their company back up again. So I'm going to take the initial number here of 1790, and I'm going to increase this number by 5%, because historically they've been growing at about 7%, so I want to give them a conservative but consistent earnings growth here of 5%, and I'm going to reduce that to 4% for the final 5 years of our projection. I'm going to take a market multiple of 8 times. So historically they've been between 6.3 and 15 times if we kind of negate these last two numbers, because I think they're very much shifted. And I think when I look at that, I think 8 times multiple is a nice conservative multiple to give a company like this, because especially for an airline company which has a relatively high debt level already, I very much want to take a very conservative estimate. And if that conservative estimate beats the stock market, that's when I'm going to be interested in buying this stock. So with a multiple of 8 times gives me an enterprise value 10 years from now of 21 billion, to which we subtract the debt, we add the cash, gives us a market cap of 13.4 billion, divided by the amount of shares outstanding. And I'm very much assuming that the amount of shares outstanding are going to remain stable over time. More likely than not, they will continue to buy back their shares, and if that happens, it's only going to be in our favor. But for this projection, I'm going to keep the number at 11.30. So this gives me a stock price 10 years from now of €11.87. So I'm going to do a very similar thing for their free cash flow. I took the number that they had here in 2017, and I took that as the baseline to start projecting their free cash flow into the future. Now, all these numbers are really quite positive, and I actually don't quite expect them to have a positive free cash flow every single year. So to kind of account for that, on every third year, I'm going to give them a negative earnings here, which makes it really quite shaky for me to do this projection, but I think it's probably the more accurate way that we can actually do this. So I think this is probably the nicest projection I can give RyanAir, because I know there are years where they have to invest heavily into maintenance as well as buying additional fleet of planes. So I'm going to say that during their 10-year periods, they will have 2 years like that where their free cash flow will be negative because they have to do some heavy investment into their business. Now I'm going to give them a 10% free cash flow yield, which I think is quite in line with what they have been doing historically. It's definitely on the higher end of that, but that's because I want to be conservative whenever I have an estimate, especially with a company like this, like I mentioned, which is quite high on the debt numbers. I'm going to give them a 10% free cash flow yield. Now that gives me a stock price 10 years from now for RyanAir of €13.41. So just looking at the stock price right now on the open market, I can buy as many shares of RyanAir as I want for €14.89. Now if I take both my projections here and I cut them down the middle, I get an average share price 10 years from now of €12.64. So overall, I think for the next 10 years, the share price of RyanAir is going to come down by about 1.6% every single year. And this is purely the number that we see on the stock market. Now, if we include the cash flow that we have projected here in these numbers, and we actually assume that we are able to get this cash flow as the investor, either in the way of dividends or in the way of share buybacks, or I think, which may be more important for RyanAir right now, for them to buy back their debt. Now, if we include this cash flow as well, I expect an IRR of 4.4%. Now, like I always mention, on average, I expect the stock market to return about 10% a year. And if I take that average number, I do very much think that RyanAir will underperform the stock market in the next 10 years. And this is with relatively conservative estimates, I do have to say that, but I also think that the increased risk of their high debt level makes it a bit of a risky investment anyway, so I'm not going to alter those conservative numbers. So I think in the long run, I don't think RyanAir is a very attractive investment right now. But let's see what happens if the stock price goes up or comes down. Let's see what happens to our IRR if the share price changes. So if the stock price comes down from €14.19 to €10.72, I expect an IRR of 9.5%, which is quite in line with the average market returns. But of course, on top of that, you also have to bear the risk that this company brings with it. So I think for me, there's definitely not a high enough risk-return ratio for RyanAir for me to be interested in this company. But of course, this is not financial advice. If you feel that RyanAir is a very good stock pick, or you just very much like the business that they have, like their services, of course, by all means, do invest in their stock. So this was it for RyanAir. Thank you very much for watching. Don't forget to like, subscribe, and all that good stuff, and I'll see you in the next one. Cheerio!